What's up everyone, I'm Steven and welcome to my channel. This video is all about Charles Schwab Index funds and I'm going to show you what the best index funds from Charles Schwab are and where and how to buy them. Index funds are a great way to get started investing safely without spending the hours and hours of time researching individual stocks. The index funds can help you create a diversified investment portfolio that compounds big time over the long run to generate you money. Charles Schwab is also one of the most reputable low-cost index fund providers. I also happen to be a long-time user of Charles Schwab, so not only do I know the insides of the platform inside and out, I can take you on a tour of what index fund investing looks like at Charles Schwab. Let's get right into it. First, I'm going to talk about what the most important criteria is for investing in index funds. Then I'll talk about what the best Charles Schwab index funds currently available are. And finally, I'll show you how to buy them and in what combination. Let's first define what an index fund is. An index fund is a pooled investment vehicle that gives you a slice of ownership into hundreds or thousands of companies with a simple click or a purchase. Research has also shown that index fund beats 90% of actively managed funds, which is terrific for a passive investor. Let's start with the most important criteria for selecting an index fund. The most important criteria is the expense ratio. What the expense ratio is that it is an annual fee that you're paying to be able to invest in that particular index fund. So the fee that you're paying for accounts for the hundreds or thousands of companies in which that fund has selected for you. It is very important to keep the expense ratio as low as possible. We generally look for an expense ratio less than 0.2%, as any larger expense ratio can greatly diminish your returns over time. Today, it might not seem like that big of a deal, but with the power of compounding, it can lead to hundreds of thousands of dollars in the long run. So that's why the expense ratio is the single most important criteria when selecting the index fund. To find the expense ratio, simply pull up the fund, look for the gross expense ratio. Now when picking an index fund, there are usually dividends that are paid out monthly or quarterly to you. If you want to set it and forget it, you can indicate you want a dividend reinvestment, which means the dividends that are paid out from the fund to you are reinvested into the fund at the market price. This will help your index fund grow itself over time and will generate thousands of dollars in the long run. The other option is to simply collect the dividends when they come into your account and use that money to do whatever you want with it. Pay your bills, buy a gift, donate to charity. It depends if you want to use the money from the dividends today or you want the dividends to generate you more money for the future. If you have no need for the immediate dividend, you don't want the dividend or cash to just sit there. You want to set up dividend reinvestment so it will make you more money in the long term, so your money makes you more money. Let the compound interest do the work for you. The great thing about Charles Schwab index funds is that there are no transaction fees. So if you want to buy into Charles Schwab index funds, you can buy into them with no cost. Now for the list of the best Charles Schwab index fund. This list is not completely comprehensive and not necessarily a suggestion to buy, but a great starting point of where you want to research into putting your money for these index funds. For Stock Equity Index Fund, the SWPPX, the goals fund is to track the total return of the S&P 500 index at an expense ratio of 0.02%. The SWTSX, the Schwab Total Stock Market Index Fund. The fund's goal is to track the total return of the entire U.S. stock market as measured by the Dow Jones U.S. Total Stock Market Index at an expense ratio of 0.03%. The Schwab 1000 Index Fund. The fund's goal is to match the total return of the Schwab 1000 Index at an expense ratio of 0.05%. The SWMCX, Schwab U.S. Mid-Cap Index Fund. The mid-cap essentially refers to companies between $2 and $10 billion, and the fund's goal is to track the performance of a benchmark index that measures the total return of the mid-cap U.S. stocks at an expense ratio of 0.04%. SWSSX, the Schwab Small Cap Index Fund, for companies between $300 million to $2 billion. The fund's goal is to track the performance of a benchmark index that measures the total return of small cap U.S. stocks at an expense ratio of 0.04%. Now for international stocks. The SWISX, the Schwab International Index Fund, the fund's goal is to track the performance of a benchmark index that measures the total return of large, publicly traded, non-US companies from countries with developed equity markets outside the United States. This comes with an expense ratio of 0.06%. For diversification into bonds, the SWAGX, the Schwab US Aggregate Bond Index Fund, the fund's goal is to track as closely as possible before fees and expenses the total return of an index composed of the total U.S. investment grade bond market at an expense ratio of 0.04%. Inflation protected bonds, SWRSX, the Schwab Treasury Inflation Protected Securities Index Fund, the fund's goal is to track as closely as possible before fees and expenses the price and yield performance of the Bloomberg Barclays U.S. Treasury Inflation Protected Securities Index at an expense ratio of 0.05%. Now the question comes in, what amount do you want to buy into each index fund? So this comes for the question of portfolio asset allocation. Usually you want a mix of equities and also bond indexes. So how do you determine that combination, the perfect combination? Well, Jack Bogle, essentially the founder of index funds, recommends you subtract your age from 100. So if you are 20 years old, you subtract 20 from 100 to get 80. And in that case, you would put 80% of your money into the stock equity index funds versus 20% in the bond index funds. Now, if you're a little bit older, let's say you're 40, you would do 60% in the stock equity index funds versus 40% in the bond index funds. There could be a little bit of variation. If you're a slightly more aggressive investor, you could slightly weigh more towards the equity index funds as well. And also, a little later on, if you want to make your portfolio more resilient to the different cycles of the market, you can add in things such as real estate investments or real estate investment fund to help booster and bolster your portfolio. If you would like to keep it even simpler, you can use a Schwab Target Retirement Index Fund. So it will be a Schwab 20 star index fund with the stars referring to what year you would like to retire in. Like the SWYNX Schwab Target 2060 Index Fund, 2060 being the year you expect or want to retire at. The expense ratio is a little higher than the other index funds mentioned earlier at 0.13%, but they set the entire allocation for you. So for example, in the SWYNX 2060, their holdings include the Schwab US Large Cap ETF at approximately 50% of its assets, the Schwab International Equity ETF at 26%, Schwab Emerging Markets Equity at around 7.5%, Schwab US Small Cap at 7%, the Schwab US Real Estate at 5%, and Schwab US Aggregate Bond at around 4%, and finally, Schwab Short-Term Treasury at approximately 0.19% of the portfolio. And these holdings account for a total of 99.53% of the total portfolio. The nice thing about the target index funds is that they will automatically adjust the allocation from stocks to bonds as you get closer to your target date or retirement date. Finally, let's talk about how to buy these index funds and in what amount. When you log onto your Charles Schwab account, at the top, there is a bar where you can hit on the trade button. Once you hit on the trade button, it'll bring you to the screen where it shows what you want to do. So there's a symbol here where you enter in what symbol you want to buy. You can enter in SWPPX or whatever other index fund that you want to purchase. It'll bring up a screen where it says what action you want to take. You can say you want to buy, sell, or buy another. Right here, you're looking to buy. There will now be a box that asks you for the amount in dollars with a minimum of $1. So if you want to buy $1, you can enter $1. You want to buy $100, enter $100. Then you can hit review order. It'll bring you to the screen just to verify the order that you actually want to purchase. From here, all you do is hit place order and your order will be good to go. There you have it. You have a great list of Charles Schwab index funds to choose from, and you know how to buy them and in what amounts of each. Investing doesn't have to be hard. Whether you were starting out with just $100, $1,000, or $10,000, whatever money you have, you can put that into index funds to get money to start working for you today. Did you like this video? If you did, go ahead and subscribe and destroy that like button. If you have any questions or comments, feel free to leave them down below. And go ahead and you guys have a great rest of the week.